This is the talk of Music City Real Estate.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here, Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team, and welcome back. It's Sunday evening.
Welcome back, Carey Ann. So good to see you.
So
and
good
your big
to see
smile.
you. Yes, always smiles.
I have a question for you. When are you going to bring that precious daughter of yours on air?
I know,
I would love to interview her. How is it like being the daughter of Carey Ann Cyr?
She would probably love that for
little
sure.
Little mini me.
There's a new show out. The kids say the darndest things, I think, and I just think of my kids.
Oh, she could be the interviewer of that darndest things.
She's so funny at this stage. 6 years old.
I know I'm probably connected to you on Facebook because it's you and your wonderfulness, but I really look forward to your daughter's stuff.
So many people do. I think she's got a bigger following.
She's amazing.
And, she's like, Mommy, you putting me on social media? She's a lot. I know she's going to ask me for a pay stub or, some income here soon enough. So.
I talk to our agents all the time about the importance of self-confidence. You've got to have self-confidence to be good in our business, and it's always important to build on the self-confidence. Well, I'll tell you what, this girl, she owns the self-confidence.
Well, it's so funny. So you wouldn't know it, but I was that wallflower. I was the girl who had no self-confidence. My mom, which I love her to death, would always say, why don't you be more like your sister, who Jennifer my other sister's got so much confidence. And we'd walk up to strangers, and just, put on a show. And yes, I would perform and I would be singing, but I would not be the one to go up into a room of anybody, or be confident at all as a teenager or as someone in grade school. So it is great to see. I really work hard. Her daddy and I work hard to really try to enforce the confidence level there for her. So
she's incredible. She really is.
She's a special gal.
A lot of people don't realize that I am extremely shy. And at 6'5" in 8th grade, seriously,
Sure.
I'm 6'5" in 8th grade. I look like this big doofus with a great big head. That's why they called me Moonhead, because I'd fall over because my head was real heavy. But that's why the grandkids call me Papa Moon. But anyways,
oh, that's cute.
So I was extremely shy. I mean, extremely shy. And people thought I was stuck up because I wouldn't talk. I'd be hiding behind something. Of course, it's hard to hide behind something when you're taller than everything else, But anyhow, so anytime I see a young person with that level of self-confidence, I just really honor that and just so proud of you for helping.
Well, in her school, that was a big reason why we picked the school that she was in, too. Mm-hmm. But her school really focuses on that, where they really try to get them to get up in front of a crowd and, talk and be confident, look in someone's eyes, and so right now we're in that stage of introducing her. So just this weekend I had to go to an event, and she was like, Mommy, so if I'm really confident and I go up and I am not shy and I shake their hand, do I get a treat? Like, she's telling me. I was like, well, what kind of treat are you thinking? It's really funny. So
let me guess, you have started working with her already about having a good handshake, I trust.
Yes, it's all about the strong handshake. Yes. So we go through that. My dad taught me that a long time ago.
No girly
hands. Yes.
Yeah. Got to have something that's confidence. Look them in the eye.
Yeah, absolutely. And so she just is one that I'm very, very proud of. And I don't know yet what she wants. Every day she wants to be something new when she grows up, But she definitely loves the camera. She's very theatrical. So we're working off of that right now.
She's a real friend of the cameras. She's very photogenic.
Yeah, she says she wants her own show. So we'll see. And I said, what are you going to teach them? She's like, fishing. I'm like, okay. Okay, she's going to have a fishing show.
Is she a good fisherman?
I guess in her mind she is. So we'll go with it, We'll go with it. So today, this morning, she loves to dance. So she's like, or the other day, too, she said, can you just, I try to do pink on Fridays with the month of October. And so we want to do pink Fridays. And she wears pink. She's like, can you just videotape me here? I have something to say. And so she had this zip up.
I have something to say.
I have this zip up sweatshirt. And I just start videotaping her. And she's like, my name is Aubrey. And I'm wearing pink. And she zips down her shirt and she shows off her pink, and she's like, and my mommy's going to wear pink too. And so you should too, because we're celebrating pink. She comes up with this stuff, herself. So it's a lot of fun. Awesome. But really proud of her, having a child at an older age, makes life really exciting. So we'll just keep it going.
I know you're a fantastic mom. You guys are doing a great job raising an amazing young lady.
Well, thank you.
So speaking of dancing,
yes.
How's it going? Update us. I know that
it's getting close.
You're getting close to the Dancing with the Nashville Stars.
Yes.
Feed America First, the biggest fundraiser. Do you feel any pressure at all?
I feel a lot of pressure.
You should if you don't.
Because I'm not one who, I raised the bar, and I did raise the bar really high on this one. And so, I keep reminding myself through all the practices that it's for an amazing cause. Feed America First is one that makes a difference each and every day. And I'm really just grateful for the opportunity to let everybody know about this great organization and understand that it's a real skill. These dancers, they make it look easy, and I thought I could dance, but
Carey Ann, when we had Tom here initially, and that topic came up, and I might have planted the seed, but I didn't twist anybody's arm or anything here. Okay, I actually felt a little bit not sorry, but I felt a little. I remembered how hard that was, okay?
Yeah.
But now, in my mind, you're Superwoman, so you just put on your Superwoman outfit and you go out there and dance, but it's way harder than I ever imagined. It's honestly one of the hardest things I've ever done in my life.
Yeah.
Is it harder than you thought it was going to be?
Absolutely. And I'm a fourth quarter gal. I really do my best work in the fourth quarter, close a loan in 8 days, save the world, with mortgages, et cetera. So I'm really hoping this fourth quarter concept is really going to work.
Good luck with that.
But, the gentleman's the instructors and the choreographers over at NDC in Brentwood, if you are someone that is interested in learning how to dance, definitely go over there. Mm-hmm. They are patient. Mm-hmm. They're very, very talented. But yeah, the song choices and the dance moves there's a lot of steps, and there's a lot of counting in my mind. So hopefully I then can fake it with a smile as I'm counting, and 1, 2, 3, 2, 2, 3, that whole thing. So
it's
a lot of fun.
Much harder.
But again, November 5th, if you're able to make it, we would love to have you at the Factory to come see an amazing show. It's Dancing with the Nashville Stars. If you have it in your heart and would just love to send a quick donation, a small donation, again, $10 feeds 100 folks. $100.
No, $10 is not allowed, folks, just for the record.
But $100
feeds 1,000.
1,000 folks. It really, you can make a difference with $100. You can go to FEF. No, you don't. You're going to go to FAFWCA.com. That's FAFWCA.com.
Feed America First
with Carey Ann. With Carey Ann,
with Carey Ann.
Yep. So
Feed America First with Carey Ann.
With CareyAnn.com, and you can put your donation.
And remember,
there.
folks, every dollar is a vote, and that's how this is ultimately decided upon, is by how many dollars to equal how many votes.
Yeah, I'd love to bring home the grand prize and be a representative of our local real estate community. So
and bless the Feed America First organization.
Yes, we're definitely for that,
because it's going to influence. I mean, every year they're expecting over 1 million. The ability to provide over 1 million meals this year with Feed America First. So no pressure there, Carey Ann, at all. No pressure at all.
Well, I told him, I said, why don't we just change this dance move a little bit? Can we just kind of do what we do at a wedding? Can we lessen it? And so there's twists and there's moves and there's leaps and there's it's a lot. And you know what? It's only like 2 minutes and 30 seconds.
I know. It's the hardest 2 minutes and 30 seconds.
For the last, how many? 45 days, over 2 minutes.
I know, it's amazing.
It's a lot. But, dancing as a profession, I at once was like, oh, that's not that hard. Well, let me tell you.
Carey Ann, you've always been one of my favorite people, but I'm telling you, this takes it to another level. And for anybody ever thinking about doing something for a worthy cause, this time next year, feel free to volunteer for one of the stars here locally to take on this project, because it's one thing to learn to dance. It's a whole other thing to know in your heart, okay, the big part of the future of this organization depends on what we create in that effort.
And I think the big picture is just taking on something that's a challenge that you maybe. For me, I didn't think I was stepping out of my comfort zone, but I'm definitely stepping out of my comfort zone where, I thought it would be easy for me, and this is not, and so to challenge yourself at any age to do something that you have not done, it really pushes you to strive for for something bigger. And so excited to kind of see where my dancing career takes me. Hopefully it brings me right back to mortgages and helping more families that way. So too funny.
I'm proud of you for whatever it's worth. I'm proud of you.
Well, good. Well, I'm excited to have you join me there and be my biggest fan in the audience.
We will be one of many, I'm sure.
Well, very good. Well, what are we going to talk about today?
Well, one of the things I want to make sure we're talking about are mortgages, because we haven't talked about the topic for a little while. And every time I come to one of your classes or hear about your classes, it's amazing how much information that you share on the topic. And I can just say this, after being in the real estate business for over 35 years, I have found that it's the real make or break around the experience has not been about going out and finding the right property. It's about getting that property financed in most cases.
Yeah, absolutely.
Probably 99% of the people are going to finance it.
Yeah, and there's so many people I think that get into real estate. There's so many people that get into mortgages. It's finding, the right person who takes the time and really trains themselves and educates themselves to make sure that you're getting the best deal possible. Is that no really a no?
Right.
I mean, and is that yes right off the cuff really going to be a yes in 25 days from now? So, working with professionals that you can trust and know that they actually stay true to their word is really important. So, really blessed to work with a company that allows me to be true to my word. And, it takes a lot to understand the guidelines. They change on a regular basis. And so we train, every Monday. So excited to talk more about mortgages here.
Me too.
Being prepared is key. So we're going to talk a little bit about that and some of the new programs that just rolled out.
Awesome.
You've been listening
Can't
to
wait.
the talk of Music City Real Estate.
Hi, my name is Monte Mohr. I'm the broker owner of Realty One Group Music City. I've been an active real estate broker for over 35 years now, personally selling thousands of homes. That's why I recently opened Tennessee's first Realty One Group office. As a real estate professional, would you like having it all? Cutting-edge technology, full support, world-class training, same-day commission deposits, all for free? How about strong collaborative culture, national brand recognition, new high exposure, easy access office, and a non-competing broker committed to your success 7 days a week? Now let's top that off with all experienced agents receiving 100% of their commission from day one. I know, where's the catch, right? There is no catch. Call us today and schedule a confidential meeting and learn why Realty One Group is the fastest growing real estate franchise in the nation. Call 636-8244. That's 615-636-8244. Or go to topagentsuccess.com. That's topagentsuccess.com.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here, Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team.
We're back already, Carey Ann, and we're going to talk about mortgages. I'm looking forward to this because this is such a regular question in my world is how do I get ready to buy a house? How can I make sure I don't fall at the last hour like I hear some war stories? And the other one is I want to hear about is refinancing tonight because a lot of folks are talking about that. Jim, aren't you talking about maybe refinancing?
I've been thinking about it. And I know where our mortgage rate sits currently, and the market seems to be moving in terms of having a lower rate possibility down the road. And it seems like they're going to be getting to some pretty, historic lows, possibly.
Yeah,
perhaps, maybe
they have been low, which is a blessing. For so many of us, some people were born in interest rates that were so low, and they don't even appreciate rates as low. Thinking back when because of how mature you are. And what interest rates you may have, dabbled into in your career. When I started, we were looking at locking people right at 8%, right? 7.8, 7.5 type of thing, right? And that was a really good interest rate. So
about 14%.
Really? Wow. Yeah. But at the end of the day, I think like when you reference that, people still need to buy homes.
Right.
It still makes more sense to buy a home.
Right.
The interest write-offs back in the day were allowed, and now they're carved out by a certain dollar figure for certain people. But it's still a win to own a home. And so with interest rates, you want to be able to find, the best one for you that saves you the most money and maybe not short term, but maybe the long term, right? Is that term? We'll talk a little bit more about it here in a little bit.
It is hard for me sometimes to feel bad for somebody because the rate went up from 4 to 4.25 or whatever the rate is right now. When I got involved, it was over 14%.
Sure.
And back then, when you made a $2,000 a month payment, it only paid for part of the interest. It didn't pay all the interest.
Yeah, and interest rates are based on multiple things, right? So the type of loan you're looking to do, the credit score that you have, the amount of money that you put down, right? So every interest rate is different. So some people say, "Oh, my interest rate is so high, and rates are going for this, and I want to make sure I can lower my rate." Well, that doesn't mean that you possibly could, right? So I was just talking with a customer the other day, and their credit score is lower due to some things of their past. And again, many of us have had a life and a story and things that have caused credit to shift. And so they are owners of a home, and it makes the most sense to not spend the extra money and refinance, and keep the interest rate that they have, because with their credit score the way it is right now, the rate may only shift, an eighth or a quarter. And does that really make sense with the cost associated with refinancing? So
regarding to Mr. McCarthy over here, so Jim, you're thinking about refinancing. So Carey Ann, you can give him some direction here. I mean, what is the magic? Is there a magic number? I know there's a lot of things to take in consideration, but is there a magic number as far as the cost to do that refinance, or how long you're planning on being there? What are the ingredients that you're looking at?
Yeah, and I think we first start with asking a lot of questions. The more questions, the more that we can help somebody.
So let's go through this as though you were sitting down with Mr. McCarthy here and making that decision.
Yeah, so I would first ask, are you looking to lower your payments? Are you looking to save the most money in the long run? So maybe we can look at lowering your term and maintain the same payment range. Are you looking to consolidate your debts and reorganize, your cash flow? Or are you someone that needs the cash out to that equity out to maybe remodel the kitchen, right? So there's multiple ways of reasons why somebody may call me to look or call anybody for a refinance.
Oh, short term, save some money.
Short term,
drive down my payment every month. That would be my motivator right now. Plus, it's just the amount, the climate of the market, taking advantage of that.
Right.
But of course, considering the costs incurred and whether we're going to stay. I mean, if Courtney had her way, we would be in the house for the next 15 years. If I had my way, I'd be out of the house in 2. So it's probably going to be in the next 7 to 10 years. We'll be out. But I keep on hearing about things like HELOCs. People are doing HELOCs as the first mortgage holder. Is that something that's happening these days, or is that?
Yeah, that's how I have my mortgage. Yeah. So I have a first lien HELOC, which is basically a revolving credit line on my purchase. But again, it follows a different interest rate. It follows the prime rate. So we've been lucky that the prime rate has decreased over the last so many months, and it decreases in quarter increments. However, when I first got the mortgage, it was a really low interest rate, and it increased quarter and a quarter and a quarter, and it jumped up 2 points, right? So it just depends upon, the needs and wants of what you're looking for. An equity line makes sense if you are somebody who is comfortable managing their money, they're comfortable not... you're okay with the variable piece of it because, again, your rate could go up, your payment could go up, your rate could go down, your payment could go down. But again, you're just paying interest, which means the whole concept of an equity line is for you to understand that the payment that's sent to you in the mail is only interest. So it's your responsibility to make the extra principal payments. It does give you the flexibility. Maybe you get paid quarterly with an extra bonus, right? A large chunk of money comes in a quarter fashion, or maybe it's an annual large bonus. So you would like to make the minimum payment every month up until that time that you receive that large bonus check or commission check, et cetera, and you make a large payment at that time. That gives you that flexibility. And again, that's more of an advanced type of mortgage. If you're looking to be more conservative and on the fixed side and know exactly what your payment is every single month, again, that 30-year, 25-year, 20-year term is going to be where it makes the most sense, because that's going to have your taxes and your insurance included in that as well, which is called an escrow account. So it just depends upon the level of comfort per each customer, I would think. And so kind of going back to that refinance, you're speaking of an equity line. Is the equity line because you're trying to pull money out, right? And usually we talk through, do you have a car payment? Do you have any other payments? And what are the interest rates of those, right? And so if those interest rates are higher than the going mortgage rate, which is a tax deduction, we may look at grouping everything together so we can put all of it into one interest rate that is a fixed, that might be more manageable. So yes, you're talking about trying to save the most money. Is saving the most money on just one mortgage going to make the most sense, or grouping all of your debts together and combining those in that one interest that's going to be lower than all the interest that you're paying now? So
and that's what we did the last time, I believe.
Right.
Yeah, because I did it with you.
Yeah, very good.
And we kind of rolled everything together. It made sense. The payment went up a little bit, but I mean, we're comfortable with it. But I mean, if there's an option for us
But your cash flow went down.
Yeah.
The amount of money. Say that how many times has. But the amount of money that you were spending every month decreased.
Right.
In the long run. Yeah. Right.
But now it's kind of like caught up to us. I mean, our cash flow stays the same, but human nature is human nature. And you look at your situation, you go, I could be paying a lot less for this thing right now.
Yeah.
Right.
So that's the kind of thing that we're kind of looking at right now. But it's kind of, I guess, unsettling to think about, okay, we're going to refi the house again.
Right. Yeah, absolutely. And again, you're talking about, are you needing that payment to be lower? Mm-hmm. Is that a necessity because you need the extra cash to do other things? Or are you looking that you would like to find a way to save more, right? Mm-hmm. So it may be that making extra principal payments will help you in the long run, right? And prepare you for that preparation of sale 2 years from now, if that's what you're talking about. So it just, every client's different. Every situation is going to be different. And so that's why asking all the questions up front.
This is such good information, though, because sometimes people just look at the interest rate and automatically, I could save this amount of money. But what's the real driving goal here? Right.
And then what's the cost associated with it, right? And that's a whole segment in itself. But, we can talk more about that. But the closing cost, there are some costs, right? There are some loans that have no closing cost. Well, how is that, right? So we'll talk a little bit about that. Is that true magic? Or where's the hidden costs associated?
Let's pick this up.
Let's continue this conversation. So thank you so much for tuning in tonight. We're going to be talking about refinancing and closing costs and how much money you can save in the long run. You've been listening to the talk of Music City Real Estate.
And I'm with CMG Financial and my mortgage team. Whether you're looking to purchase your first home, a second home, or even an investment property, my team and I, we specialize in making the process of homeownership smooth as possible. With our vast variety of mortgage programs, our competitive interest rates, and our local support center, we have the ability to serve so many deserving families and help find just the right mortgage program to fit within your short and long-term financial goals. Mortgage loans is what we know, and approving them is what we do. We'd be honored to help you begin the process today. Check us out at yourtnlendingsolution.com. That's yourtnlendingsolution.com. Or give us a call, always a friendly voice, 615-456-4456. That's 456-4456. We look forward to helping you and beginning your mortgage application today.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here, Realty One Group, Music City.
Hey, Carey Ann with CMG Financial and my mortgage team.
Carey Ann, I really appreciate your knowledge, your insights, your big picture vantage viewpoint on this topic of financing, and especially when we're just talking about the refi aspect, because so often I think people maybe fail to really weigh out what is most important. Sometimes whenever I am asked to come list a property, one of the things I always do is pull up the tax returns on that property. Not tax returns, but the tax records. And I can tell sometimes some folks will refi every year or something, It's like they're chasing after something or trying to accomplish. I don't know what they're trying to accomplish. I love the idea of asking all those questions so we really find out what's best for the individual.
Yeah, I do think there's some people out there, you and I both get a lot of marketing calls. And if those calls are coming from people that actually did not do your previous mortgage, they're probably just fishing to see, would you be interested, and is it really the right thing to do? And that's the reason why I take the time to ask all the right questions. We usually give a free consultation to talk through all that, because in the big picture, you want to make sure that the cost and your recoup time is going to make the most sense for you and your family.
Right.
If you might save a bunch of money, but the cost associated with it still has you in that house for another 7 years. Is that really what you're looking to do? Right. So the folks that are refinancing every year, unless they're able to have all the closing costs in that interest rate and you're able to drop that rate with the cost being paid by that rate, it's probably putting you in a different situation.
Not in a good situation.
Yeah. And that's a sad deal where I would hope that loan officers, just take our job really seriously and our license really seriously and really just, slow down and not look at it as just trying to get another deal, but just try to help and make sure it's the right thing for the customer. Lead with doing the right thing. But, so there's closing cost, right? And so depending upon how high rates were and where they are today, interest rates, there's a cost, and then some of the rates have a rebate. And back in the day, people would able to sell you an interest rate, and that loan officer or that bank would keep all of that rebate, right? Mm-hmm. So that's what happened many, many years ago. And now what happens, and many banks follow, and ours as well, where if I'm selling you an interest rate that has a rebate, which is money back, goes directly to the consumer. And so I might be able to give you a specific interest rate. It might be higher than the going, but lower than what you have right now. And it may be an option where it covers all the closing cost for you. So this allows you to have a no closing cost type of refinance. You also are able to roll in your closing cost on some types of loans. And so that allows you, and that's kind of what you were talking about, it kind of eats out that equity that you thought they had because they roll their closing cost in. And what are closing costs in a refinance? Well, basically, they're about the same as a purchase. A little bit less, but about the same. So you still have a title company reviewing your title searches. Usually, if you're working with a lender that is experienced, they'll ask you for your old title policy so you can get a dual discount and save you a little bit of money there. So if you're ones that are looking to refinance now or in a refinance, make sure to hunt down that old title policy. And if you don't have it, you can provide your old CD closing statement. And depending on when you close, you might need to have your old settlement statement, because we can search that title for you and work to get that discount as well. You have an appraisal, right? So that does still cost a little bit of money. And there's some state tax stamps and things that the government's still going to want to provide. But then you have your escrow account. So the folks that are required to have that, and that's anybody that doesn't have a loan to value under 80%, you most likely have an escrow account, which your payment includes your taxes and your insurance. And so we're going to have to start another escrow account. And so if you call your current servicer, there's probably a balance right now of your escrow, right? There's probably so much money sitting in a so-called savings account that makes no money. It's just sitting there waiting for the bills to arrive. All of that money is going to come back to you after closing. That usually comes to you in a 3 or 4 week turn time. So understand that it may seem like your closing costs are high on the upfront because you're starting another escrow account, but you are going to get that money back to you, which you could in turn put towards the mortgage, do a principal reduction right when you get it, or you can use it for a rainy day fund, paying some bills off, or getting prepared for, the holiday season. Also know that you're going to skip one mortgage payment, right? So just like when you purchased any time through that month, you skip the following month and your mortgage payment was due the next month, and similar to refinance. So we possibly right now can set it up where you could position yourself and skip 2 mortgage payments, right? And so that gives you a little bit of breathing room. Understand that's saving you that money today, and you can kind of maybe offset that or take those 2 payments and bring them to closing, and that covers the so-called, cost that you're thinking about covering or paying to do the refinance. So you take the total cost, you take the savings, you divide it in. It's going to tell you how many years that it's going to take for you to recoup that. And if you're in the green, you think you're going to be in that property longer than a period of time, and that number pops up and it's less than that, then you're going to be in the green maybe for 5 years, right? Or for 3 years, and that might make sense for you. So it just depends upon what you and your family are looking to do today and in the long run.
So Jim, does that helpful at all?
It did.
Have you decided what you're going to do?
always got to look at the numbers.
Yeah.
And
usually 1%, when the rates drop down 1%, that's usually a good number. These people that refi on a quarter, there has to be a real reason, a main reason for their family to have to do that. I'm just not going to do that if it doesn't make the most sense for them.
In our case, it could be 2%.
Yeah.
Wow.
I think that could add up.
Mm-hmm. Yeah, and again, everybody's interest rate is different, right? It's still on a refinance. It goes off of the credit score and things. But I helped a lady who was in a pickle. She was a veteran, and her credit score was very, very low due to a medical situation. And we were able to save her 2% on her interest rate. So it made the most sense for her. And that's even with the higher interest rate because of her credit score. So I helped another family pull out some money and pay all of that lingering debt that just kept just being the conversation at the kitchen table, or caused all the grief and the fights between the marriage, right? And so that's a good reason to kind of get it all organized and regrouped as well. So there's many reasons why folks might look to refinance. The cash out to remodel. I helped another gentleman just recently. He did a cash out because he was finally ready to do that kitchen that he's always dreamed of, and he had the equity that allowed him to do that. So there's many different reasons why you might refinance.
So, Carey Ann, I know you can't make any promises and can't really talk about it in detail at all, but is there any sort of rumor as far as what the tendency of interest rates might be?
I think we live for today. Rumor has it something might happen next year, but again, those are rumors, right? So I just live for today. And if it's the right decision for you today, I'm never a believer in hoping that rates will come lower, and waiting out. And then we find that person wanted to purchase and held out, and now the interest rates are higher, and now they don't feel comfortable qualifying or even making that payment, So live for today. And if it's the right decision, then we can make a move on that.
Cool.
For sure. So being prepared is key. So what does that really mean? Even if you're somebody who is bought their second or third house and we're really busy, just know that the lender is going to ask you those questions. The lender is going to ask you for certain documentation, and what questions are those? Just think about what has happened in your last 2 years. And someone who's even seasoned and mature and maybe has had 2 or 3 homes, but you may have had 2 or 3 jobs in the last 2 years. So know that they're going to ask you all about your job history for the last 2 years, where you've lived over the last 2 years. Again, refinancing, which means you've owned a home, but if this is a purchase, you may have rented or lived with family or something. So take a moment. I always say just take a moment, and it's kind of like writing out your resume for your life over the last 2 years. Pause with your spouse or your other half who's going to live with you, or just by yourself for that matter, and just write down exactly what has happened in the last 2 years and be prepared. Already know what they're going to ask you. Where are you working, the address of where you work, your job title, how much money you make in gross income monthly, and just have all that prepared. Some people come to me and they've had 6 jobs. They don't know the time frame or the dates or anything, and they wonder why there's confusion and frustration throughout the process. And I had another gentleman who was very seasoned, and he didn't want to sign his documents because he just didn't have enough time to do it, right? And so we need those documents signed in a timely fashion to allow the lender to do the verifications. And so come to find out, he had a snag with the IRS. Well, I wouldn't know that.
Wow.
And he actually didn't realize that. And that was up in Kentucky. And so he was looking to get closed, and all of a sudden we can't get the documentation that we need from the IRS. And so he has to drive to Kentucky to get it, and I made some exceptions for him and things, but other lenders may not, right? And so being prepared, have those documents signed early is so important. It gives the lender some time. Time in our world is money, meaning like it just allows us to do so much more for the client if we had a little bit of time. Because I know sometimes we feel like we might be putting the consumer out by asking for things up front, but I'm a big believer, let's get it done now. Let's sit back and relax and wait versus scrambling and running around at the last minute. I'm blessed with the calls that people have had some trouble getting qualified. Just this past week, I think there were 6 calls that I got of people that were denied. They're just flooding in, and that comes with a lot of my marketing because I'm the mortgage whisperer. Get out there and fix all the problems. But again, are they problems? Or is it just that lender didn't know, what they're doing? Why are you being found out that concern of that file is happening right before closing? Why did you not know that 30 days ago, right?
Exactly.
And things like that. So, but maybe it's because you didn't provide that documentation early enough to the lender as well. So you being prepared is key. You'll find that it'll create a confidence for you and your family to allow for a quicker approval, which strengthens your negotiating power when it goes to finding a home, etc. So being prepared is really important. So let's take a short break. You wanna?
Yeah.
All right, let's do that. When we come back, we'll talk more about some new programs that just came out with Freddie Mac. You've been listening to the Talk of Music City Real Estate.
Super Talk 99.7 WTN, the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
Monte Mohr here, Realty One Group Music City.
Hey, Carey Ann with CMG Financial and my mortgage team.
Carey Ann, we forgot to mention to folks to be sure and send their questions into questions@talkmusiccity.com or hashtag TalkMusicCity. We don't want to forget this part. This is important.
Yes, and this show is also a podcast, so you can listen at your leisure. We're on iTunes, Stitcher, Google Music, and others, or you can simply watch us on YouTube or our favorite, Facebook. Search the Talk of Music City.
It's really my favorite. I don't know if you're just kidding when you say that, but I really like Facebook.
I think you're the one who scripted this out for me.
I think I did. But Monday mornings are some of my favorite time because I know Mr. Jim McCarthy is going to put it on Facebook, right?
Yes. Brother? Oh, usually, yeah.
I look forward to that.
Oh, thank you. I appreciate that you look forward to that.
Too funny. So
I look forward to it every week.
We talked about refinances. We talked about being prepared and the importance of that. So many people need what they call a pre-qualification or pre-approval letter, and they think that it's just no biggie. Again, sadly, it's just become the norm that piece of paper doesn't really mean much, right? And so let's get back to it meaning something, and so, take a moment and submit all your paperwork to the lender in advance if you can, so we can actually give a true letter of approval. You'll find that anytime that I write something and my name is on it, I won't write it unless I truly can make that happen for you and your customers, and the consumers can feel confident in that. So we're going to ask all those right questions up front, ask for those documentation and double check that, because what I found is you and I and a lot of consumers like to round up. We like the grass is greener, the sun is shining, type of thing, which is a good thing. But when it comes to truly getting approved for financing, we want to make sure everything is exact, because it comes down sometimes to just decimal points, and small percentages of a loan being able to be approved or not. So
Carey
things
Ann,
like that.
So help me understand this as a real estate broker of many years. How can one person be denied at one lender and approved at another? Now, I know you have done this before, and I know that you are looking at all the same rules and regulations as somebody else. Is it because they don't know the details of what takes to approve a loan? Is that what it comes down to?
I think depending upon who is referencing if that loan's approved or not, would determine their experience level, right? And so on Friday, an agent called me and she shared me the storyline and the reason why they can't do the loan. And I said, okay, well, I'm not going to tell you that that's not true, because I would love to help that client, but that's not the guideline. That guideline changed 2 months ago.
Wow.
So, and they didn't realize that guideline changed, right?
Uh-huh.
So the reason why I have my team in a meeting for 2 hours every week and go over new programs and go over guideline changes, et cetera, is because it's so important. Something so small that we've been doing for so long, can change, and you want to be the one prepared and being ready to go. Also, lenders have sometimes things called overlays. So the agencies, which is going to be Freddie Mac, Fannie Mae, Ginnie Mae, which is going to be your government loans, they have their own guidelines, right? And so then the banks come in place and they say, I understand their guidelines are this, but I want it to be a little bit more conservative, so I'm going to put something on it called an overlay. So the credit score can only be blank, or the ratios can only be such and such, even though the agencies allow for different things.
So the overlay is really to keep them out of potential harm's way? Is that what they're just trying to keep it conservative?
Yeah, and I look at the statistics of all of my files and the default rates and things, and I find it was interesting because you would think the people that would have trouble making their mortgage payment would have lower credit scores. And the last time I looked at it, it was not the case. And what I did realize was the percentages of the people that may have had a bankruptcy in their past or a reason why they gave up on paying something in their past caused them to be okay with not making a payment today. But there's other reasons why people have trouble making their payments, of loss of job or a medical situation. There's just more to just not poor credit, due to that. So a lot of the folks met the agency's guidelines and felt were able to get approved easily, but then maybe down the road had some difficulties, making the payment. So I always stress with my clients, if you ever have any difficulties, always give us a call because we want to figure out a way that you can make the payment, and feel comfortable with it. And that's a big reason why I ask everybody on the upfront, what is your comfortable payment zone? Are you paying $1,000 today in rent? Are you comfortable going to $1,100, or is $900 better, or right at that $1,000 versus the computer system saying you're approved for $2,000 and that lender approves you at $2,000. You're really excited because now you're in your dream home, but then you have difficulties making that payment. So double checking the comfort level of everybody is so important on the upfront. But so yes, overlays are big deal. I think. Another example, the client, called me and to do a THDA loan, you need a 640 and they had a 638, and the lender wasn't able to approve them. Well, I helped them and found ways. We paid down a credit card and was able to rescore them in our office and give them 10 points, and not me giving them 10 points, but the credit agencies were able to boost their credit score 10 points and now we're approved. So I always say, if you get into a situation where you're told no, is it really a no? Yeah, I'm one that has the true testament to say that so many people I approve, maybe 10 a month, that were told no, maybe not just once, but twice, that I can get approved. So if you're somebody out there that has been told no due to mortgage financing, I'd be honored to look at it and see if there's something else, that we can do. Sometimes it's just the wrong program that you're on, and we can put you on another program because there's so many great options out there. Freddie asks for certain guidelines. Fannie asks for something different. They're two conventional types of loans. If you don't know each guideline set, you may just think that you can't go conventional. So
how do you personally stay so on top of everything? Is there some sort of a system that provides a hot sheet of changes to you, or how do you do that?
Yeah, I think working with a company that really does their homework and studies. And I think there's one person, her name's Jane, behind the curtain. I've never met Jane, but I love Jane. And she is always on the lookout for new changes, new guideline changes and things that are coming up. FHA sends new HUD letters out on a regular basis. They prep us. Sometimes they prep us a couple months in advance, of the change to be. So it's a good thing. Working with a company that wants to stay on the top of all changes is important.
So I noticed one change recently has been a lot of homes now, or certain price point of homes, are not requiring an appraisal now. Is that? Yeah. What's the deal behind that? Yeah, so
it could be a purchase or a refinance. Again, all loans are submitted through a system, an online system, and so a desktop underwriter per se, and that's what they call a DU. And we run that through, and the computer systems, references that you're approved or you're referred per se. Like it's basically rejected, and the computer will review the address and decide if the computer is comfortable with that purchase price from a value standpoint.
Does the strength of the buyer have anything to do with that equation?
Yeah, I think so. And some of the, you'll notice that the folks that are putting more money down may be issued a property waiver versus a true appraisal. But again, some people that even get issued the property waiver want an appraisal because they want to make sure that their house really is seen by a human and is of true value there. So it just depends upon what the customer wants, and we follow the lead of the customer. with that.
Interesting.
Yeah. So there's a new program out here. So Freddie Mac is really working hard to connect with more buyers and assist with down payment and closing costs. So it's called Borrow Smart with Freddie Mac. So it's a conventional loan. It allows, depending upon the income level, it's going to be follow the median income levels, so per county, but it's going to allow you up to $2,500 through Freddie Mac towards your down payment or closing costs. So they're really working hard to make a difference for the community, and it's called Borrow Smart. So if you are someone who may be under the median income limit of your county, this is a great program that you want to look into.
So each is county differentiates between each county.
Absolutely, yep. And so depending upon...
How much variation is there?
Well, so it depends upon if you're 50% under, 80% under, et cetera, et cetera. So it depends upon if you get the $1,000 from Freddie, $1,500 to $2,500. So there's multiple different tiers there. But again, it's just another new program that is out that is helping some families gain that home ownership, maybe because they didn't have the down payment. Because remember, you could put as low as 3% down on a new first-time home buyer loan. So. Well, that wraps up another Talk of Music City Real Estate. We thank you so much for tuning in. We'll see you next week, 5 p.m. on Sunday.